today. Is that okay?
Okay.
Is that okay?
Yes, that's okay.
All right. So, or normally on a Monday, right, or on the first day of the week that you're starting, you start off on the weekly time frame, right? So let me just narrow it down for you so that you understand what's going on the weekly time frame. On the weekly time frame, right, this is what we decided. We were not going to say, okay, there's a trend, the trend is bearish or the trend is bullish, because right now, price is technically ranging in this area, right? Like these 2 points right over here. And then we have some sort of a mid zone around this area, all right? So if price wanted to go higher, we should have seen price going higher on this bearish candle and on this bullish candle. And if price wanted to go lower, we should have seen price going lower on this bearish candle, but it rejected. And this is a very strong rejection. When God leaves long wicks, you need to take them serious. For example, here, 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 and here, as you can see, long wicks, we need to take them seriously, and that's what it did last week. So we need to take this week very seriously. Either it will push price down or it will push price higher. But why would they not push price higher on this candle? That's my question. If price wanted to go higher, I probably should have seen it going higher on that candle, but they did not. So does that mean that candle was a stop loss hand, or was it a manipulation, or they just wanted to drive price to a place where they can open their trades? All right. So that is my question, right? So that's on the weekly time frame. So on the weekly time frame, we have a long wick to the bottom. That means we have a chance of a weak fill, right? And since the candle closed bearish, that means we definitely do have chances of price pushing down to give us that weak fill. Maybe it will give us the weak fill, come back, retest the low, and then reject, right? That's one possibility. Or maybe it won't give us the weak fill, it will drive price a little bit lower, maybe to 32% or 50%, and reverse the price. But my question is still, if price wanted to go lower, we should have seen this bearish candle closing a little bit higher, maybe higher than the previous weekly opening. All right. Do you get what I'm trying to say?
Yes.
Yes.
So
So
you expected the last candle, the last weekly candle to close. Repeat that last part again. I'm sorry.
all right, the question that I'm asking the markets is, if price wanted to go higher, right? As you can see, let me remove this. If price wanted to, if you look at these candles closely, those two last weekly candles, right? If you look here, right, this candle, the one that closed last week, the bearish one, it really broke below, it closed below this area, right? That's the opening of our previous candle before that, right? And if this candle was driven down, right, to retest, reject, and reverse, shouldn't we have seen it closing somewhere above, maybe around this area, above our previous closing? And that can actually push price higher because it's rejecting the low and it's closing above our previous low that was set. Now understand?
Yes, that makes sense.
Instead, the candle closed bearish and below. Even though it has a long wick, it's still a strong bearish candle. But if it had closed a little bit higher, then it would be a weak bearish candle, and a weak bearish candle can be reversed. Does that make more sense now?
Okay, so you said the weak bearish candle can be reversed. That's that last candle right there.
Which you mean this? You mean this one?
Yes, is that the one you're talking about?
When I say a
You're talking
weak
about
bearish candle can be reversed, Yes, in a sense, yes, but we also don't, because this also is this actually a very strong candle, to be honest. And I know this pattern very well. This three candle pattern. This is a three candle pattern. All right. So now let me explain. Let me explain. All right. This is a very, you see this candle that we have right here. This is a very strong candle, right? And then you see how price on compared to our previous candle, this one, you see how price gave us a weak fill. It went higher. It even went above, right? And that means that it even did a stop loss hunt. Then it went and then it went below, right? But it still came back up and closed around the same area it opened. That's an indecision candle, right? That's a reset candle. That candle is telling us that price can either go higher and it can either go lower, right? That's one. The second thing, it's also telling us that they have reset the charts. So they are resetting their targets. So whatever targets they had before that candle created, they are no longer in play. They have reset new targets, right? It all depends with them if the targets are lower or higher. But it made sense for the targets to be lower because technically we are, if we look at the whole thing, we are in a bearish trend, right? Because price has been going down. So it would only make sense if this was a correction for price to go lower, right? So that candle was a very strong bearish candle, and technically it did reach our last breakout, right? So it has three things that was supporting it. That candle was a strong bearish candle. However, the next candle closed bullish, but the mistake that they did on this next candle right now, let's explain the next candle. The mistake that they did on this next candle is price did not close above our previous candle, all right? Because now this indecision candle of ours, right? This indecision candle, the high and the bottom create a range, right? So these two points are creating a range, and our new candle did not close outside of that range. It closed inside of the range. All right. So that candle closing inside of the range gave all of the chances to the next candle to push lower, this next candle to push lower, and that's exactly what it did. Do you understand?
Yes. So where do you take your entry at as far as
on the lower time frames? Because right now you don't know what's happening. So what you do is you now use this information that you have on the lower time frames. So in this point, right, in this, okay, before we get to that, this is what I was trying to show you about a weak bearish candle and a strong bearish candle. This is a strong bearish candle. This is a weak bearish candle. Do you see the differences on the closing? All right, I'll show you. If you look right here, before that week, that strong bearish candle close, right? If we look to our left, we probably had some sort of a zone around this area, right? If we look at this candle before this candle closed, right, we probably had some sort of a zone around here, right? This one closed below, this one closed above. Hence why this one is weak, why this one is strong.
Okay.
All right, that's what I'm saying. Just because the candle closed bearish does not necessarily mean it should go down. The same as if it closes bullish does not necessarily mean it should go down. But sometimes if it closes correctly, it will do what it needs to do. All right. Now for entries, now we know the story that we have on the weekly time frame, right? So now I know there are certain points that price needs to meet for it to go lower or for it to go high. We move on to the daily time frame, right? So since today is a Tuesday, that means we came yesterday, we were here, we made some analysis. Now it's time to reevaluate our analysis. All right. Now, if you look at my zones, we have a zone right here. Okay, let's not do zones right now. Let's analyze the candle. That's a bearish inside candle. You can even call it a doji, but that body is a little bit big, but that's a bearish inside candle. When I say inside candle, it opened and closed inside the previous candle, the range of our previous candle, which is this candle right here. It opened and closed inside that candle. It didn't go below or above. All right, that's what it means when we say inside candle. So this would be the inside candle. That's the mother and that's the child. All right, and it's bearish, so that's pushing price lower. That's a continuation candle. It's not rejecting. If it was rejecting, it would be bullish, but it's bearish. So that's a continuation candle. So that's telling us that price still has chances of going lower. In relation to our weekly analysis, that makes sense because we are expecting a weak fill, and we said that was a strong bearish candle. So we can expect price to go down. All right, that's the first thing. If we go on our 4-hour time frame, that's where the mid zone comes in play. This mid zone right here that was created, right? Price has been failing to break that, right? If you zoom out, if you look to your left, that's price, that area. If you look to our left, this is the area, right? Remember, a zone is not a line, a zone is an area. This is the area. If you look, see, rejections, 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 rejections. That's what it's doing right here. All right. So since today is a new day, and yesterday, if we look at our yesterday's analysis, yesterday we were expecting price to go lower. We wanted to short price from this candle, this bearish candle, to this low. That was our first target. That's exactly what it did. So we achieved that target. All right. So if we're reevaluating our points, we are now saying this zone is now unnecessary. All right, we no longer have a zone there. We now still have the ones in play. Price still needs to break down here, all right, for it to come all the way down here, first TP and second TP. All right, that's our first view. Second view, we all know 1, 2, 3. Could this be 4 for price to go higher? Since price is in a range, remember we said our weekly time frame, price has been in a range, candles creating next to each other, price is in a range. So if it went all the way to the bottom and it rejected, it might want to go all the way up to the top. All right, so we're also saying price could go higher, but for price to go higher, we want it to break above this area, right? So that's our next point. So that's if you are paying attention to the 4-hour time frame. So if you're trading the 4-hour time frame today, in the next 3 hours, when the 4-hour candle closes, you are here watching and waiting to see if the candlestick is going to close above this area or if the candlestick is going to close below this area. That's what you're waiting to see. And then when you have that information, you can then use it to enter your trade. If it's above, you're buying. If it's below, you're selling, right? Of course, if the closing is good, you can do it immediately. But if it's not, you can always wait for that retest, because if it's breaking or closing above these 2 points, it's going to do a retest because this is a big breakout. Price has been here for a while. That means price will retest. All right. And then you move on to your 1 hour time frame. To your 1 hour time frame, you are now saying, okay, do I need to change anything? Do I need to add anything? We just need to adjust this to give us a closing that's not cutting 2 candlesticks, and then there you have it. The high is very much perfect. All right. And since we're looking for an area where we can add something, right, we're now looking to put, okay, if price does close, if my 1 hour candle closes above here, right, if I have a strong bullish candle around this area, I'm okay buying. All right, because it's a good setup. Price tried going lower, but it's still rejecting. If it closes above as a 1 hour candle, that's okay buying, because even if we look at the 4 hour time frame, it's above our 4 hour candle. So if the next candle that's going to print is bullish, that means price is going to be way above our previous 4 hour candle, and that works in your side. So we name that our 1 hour buys. If price closes above there on a 1 hour candle, if you're okay risking it, you can go for it, right? That's what we're saying. However, if this 1 hour candle doesn't close bullish and it comes back and closes as a bearish candle anywhere below here, that's it, go sell. Because on the 4 hour candle, you have a bearish 4 hour candle, as you saw. Looking at 4 hour candle, we have a bearish 4 hour candle. That means price wants to go lower. We have a daily bearish candle. We have a weekly bearish candle. 4 hour bearish candle. 1 hour is only giving you another bearish candle. That means you definitely can sell. That's a definite sell. Like, you have all of the signs. What else can you do other than expect another bearish candle? It's common sense. It's only logical. So you know this is your sell point, you know this is your buy point, this is your strong buy point. This area also can even be your strong buy point as well. If you think this one is a little bit risky, price can still reject. I would even wait for price to close above this area. This is a strong buying point, and then take that point and trade that point. When price closes above that point, I would go for it. I would go for it. Do you understand what I'm saying?
Yeah. Yeah, I see I definitely see the points marked out.
Do you have any questions?
Okay, so for the sell side, so if price was to drop below our 1834 level, are we waiting for a retest back on the 1834 level? Like if it broke and closed below 1834,
Yes,
we wait for a retest back to that level and then take the sell.
exactly. So you will be, let's say if this candle that we have right now, it closes somewhere around here. So when you can either put your sell limits, or you can just watch price coming back there, and then you enter from there, expecting it to go down. Because if it breaks below, even if price doesn't move in a straight line, so it's gonna do that bullish move. Once it does that bullish move and it reaches your area, you sell, expecting it to go. Even if it takes time around that area before it goes down, all you have to do is just watch what price is doing, and remember that your invalidation point would be right here. Or if it does give us more information around this area, if it creates another invalidation point, that's your stop loss. If it gets there, then you know, okay, I've been proven wrong. Price wants to do something else, and you watch for that something else. You wait for that something else. All right.
What's the invalidation point? So that would be our stop loss at 1838.
Yeah, so because basically a stop loss, right? You can put your stop loss once you consider maybe like you've analyzed the chart, or some people use like the 10% rule, some people use zones, like people consider their stop loss in many different ways. However, in validation point, we're saying, let's say price has been ranging, right? And you bought down here, right? And then price does whatever it does, right? And then
Mhm.
it gives you a new low right here, right? You are still in the trade at this point. So as price is doing what it's doing, right? You're saying if price comes down all the way down here, let's say maybe your stop loss is on break even, or you still have your stop loss below your trade. If price comes all the way down here and it closes below that area, my trade is no longer valid. There is a new setup in play, because technically that would give us a new setup in play because price is already broken. Let me use a different because price is already broken one and two supports. That means the trend has changed. Three, we can even say it is a trend line. Then price is already broken that trend line.
Mhm.
There's so many things that you could say price is already done to show us that it's no longer going higher, it's going down. So your
Mhm.
validation point, which you're saying, okay, if price, I can be in this trade as long as price does not break this area. This area is the area where I can say, okay, price is now changed the whole gameplay. Because technically price can do whatever it wants as long as it doesn't break some sort of a point. I can even show you an example that happened yesterday. All right, now, if you look at this area, actually, let's do it this way. All right, that's fine. If you look at, let me highlight the points. If you look at this high, right,
Mhm.
and this low, all right, so we are only looking at the information that happened this side, all right. Forget about everything else that happened after this line that's going down, okay? Are you on the same page?
Mhm.
Are we on the same page?
Yes. Mhm.
All right. Now, if you have this candle, you came on the market, you saw this candle, right? It's a bearish candle. Maybe you entered your sell right there, right? Expecting this next candle to be bearish, right? But
Mhm.
since you entered your candle there, you were selling, um, no, okay, you sold here. Your TP was somewhere maybe down here, right? And then you were saying, okay, my stop loss could be maybe above the candle that I used in play. It's not good risk, but your trade has very high chances of hitting your take profit. However, the next candle went all the way up, but it didn't close above your invalidation point. Because technically, during Asian session, price came all the way above here, created a high, right? And then from that high, it was rejecting, and this was your confirmation of the rejection, right? Okay, because you're now saying, okay, even after a bullish candle, price tried going higher but it failed, and with a strong bearish candle that closed. Are you understanding?
Yes.
All right, so you can actually sell and be like, okay, my stop loss might be high, but that trade has higher chances of fulfilling, right?
Mhm.
Because yeah, all right, since you understand.
Gotcha.
But the price came all the way up to retest that high. Why did price come all the way up besides retesting that high? Because retesting that high is actually a very good point. And if you had your stop loss on the right area, your trade would have been very much safe. It would have just taken longer, but your trade would have been very much safe. All right.
That's where I would like to sell it though.
Sorry.
Yeah, that would have been where I would like to sell it up a little bit higher.
Exactly. Yeah, we could have actually like placed a sell like when price comes all the way up to retest. All right. So when this candle closed, instead of selling immediately, you knew that price would want to come back and retest. And it would want to come back and retest on top of that because that's when London session opened. And remember, we said price will try to retest the previous zone that was set during Asian session when London session opened. Because if I check the time, let's check the time when that happened. All right, if we check the time, this was 8 o'clock. All right, our breakout candle happened at 9 o'clock. All right, so people still have a rush to enter the markets, so they entered when this candle closed, right? And what did they do? They gave you more hope that price is going lower, right? More people sold, but the next candle it went all the way up because they know some people have their stop losses in this candle, this strong bearish candle, because people were selling when they saw that. So they have their stop losses in that strong bearish candle. So that bullish candle was our stop loss hand, right? That's where it all happened. That's our stop loss hand. But it didn't break our invalidation point. The invalidation point, the high that was set during Asian session. So as long as it didn't break that invalidation point, price was going to go lower either way. And that's exactly what it did. So that's why I always say, like, you can understand like a lot of things about trading, but as long as you don't know how to tell the story, you won't know what to do when you're in the markets. Well, you need to have your own confidence to back you up when you take a trade. Okay.
Exactly.
You have any questions?
Let's see here. No, I understand the game plan so far on what's going on between the range, what to look for. Uh, let's see here. What I was actually looking at on gold, right, was the buy at on the daily range of what's this 1833. But
1833. Yeah, that's a good point. Because if it goes lower, your first target should be here. Then you can put your second target here, and then third target here. All right. So yeah, perfect. Right there. The only
those
thing
are the
that
three targets for sales.
sorry.
Those are the three targets for sales.
Yeah, exactly. The three targets for buys would be three targets for buys would be if you were to enter, if this candle that's printing right now was to close bearish, I mean bullish, like above here, as we explained before, and then you entered, the first target would be here, considering on your entry. If your entry is not that good, then your first target would be here, and then second target, and then third target. The only thing that you need to remember is as price goes higher, keep moving your stop loss into profit so that if price is to ever do something that wasn't supposed to happen, your trade at least closes in profit and you can always re-enter again. Is it making sense?
Yes.
Yeah, you can always re-enter. So as long as that previous trade is closing in profits, you can always re-enter.
So when you actually look at a trade, so like when this 4 hour closes, depending on where we close at, I see I'm not like used to taking a buy like on a breakout or a sell on a breakout. like I normally take it as soon as it hits a resistance. Like I would like to take it at the very bottom or the very top.
Yeah,
'Cause
I get what you're saying. I understand because it's a very good risk and all, but sometimes you miss a lot of trades because you're waiting for it to hit the bottom. And normally we don't always hit get it right at the bottom or the high. But if you are to take it after a breakout, it's actually a much more safer trade to trade, and you can even then trade like bigger lot
yeah,
sizes. You can even risk more because you know price is going to go in that direction. You have all the signs, you have all the confirmations. It makes it much easier to take. So you can start by taking one trade, two trades. The more you do it, the more you get used to it.
for sure. I definitely got these zones marked up though. I'm gonna keep an eye out for
You'll get it. Don't worry about it. You'll get it.
them.
You just have to keep practicing. Sometimes you don't even have to just take it. You can just watch. You
Mhm.
know, you can just watch and practice. You can even trade demo if you want.
See how it would go. See, I just don't know how to feel about any of these. Okay, because the way I see it, right? Um, so I'll just like look at the chart. So I feel like all the big moves before continuation like needs to hit some type of major resistance or major support. But
How about I will try to take more trades with you live. So if we to end this session, right? If anything happens that I think is a good idea to take a trade, I'll let you know. And then we will take the trade and we'll trade it together and I'll help you manage it so that you can see how I do it. And then maybe you can understand it a little bit much better.
yes, please, that'd be helpful.
All right. Yeah, we can do that. Maybe that will help you a little bit much better.
Yeah, because I have to get into the flow of doing a breakout trade, and it'd be yeah, really helpful if we answer together. That way, I can kind of know what I'm looking at and what I'm looking for more just live, because it just gets more real when you enter the trade.
Yeah, I get that. I get that. All right. I'll keep watching and then I'll see if anything happens that I can show you. All right, but this meeting is about to end. We're running out of time.
Okay.
All right, so let me see what I can do. Just give me a few minutes and I'll see if I can send you another link.
Okay.
All right, sure. Talk to you in a bit.